Hello, this is Steve with the Free Bullion Investment Guide. Today is March 3rd, it's the 9th. Today is March 9th, and I am doing a review and outlook for the US dollar. This is a US dollar daily chart, and in review of last week's video, I had shown you this falling expanding wedge in the US dollar's price chart. It is a positive pattern for the dollar, and as you can see, it rose up well above it, confirming it and breaking the $97 resistance level as well as the $97.45 resistance level. Now it stopped short of breaking the 97.70 resistance level and then came back down late yesterday. Well, all of yesterday, basically, it came back down. So it did break the falling expanding wedge as expected, and it moved up. Moved convincingly higher. Now, why did it do it? Well, late last week we got a good GDP report, so that helped. Also, what helped was the ECB pushed back their rate, and they also announced more funding for European banks. So that helped. That also pushed the euro down. Right here, this was Thursday's move. You can see it correlate with the US dollar. This was Thursday's move right here. So we can clearly see that the ECB also gave fuel to the fire with the dollar's rise. Now, the reasons for the pullback in the US dollar was twofold. One, we got a lousy job report. As far as the number-wise, the number of jobs created, that was lousy. But on the other side, the flip side, we also heard, though, that wages rose, I think, the highest percentage in 10 years. So that's a double-edged sword right there. Yeah, it's good for the worker, but it could be bad for, for stocks as far as margins go, and the other reason is because of inflation. Rising wages is one of the things that I pay attention to as far as outlook on inflation. So that could help and hurt the dollar in the future. We could see rising inflation would cause the the Fed to raise rates. Now, but poor jobs report also, though, says no rate hike. So that's the reason why we saw the dollar fall. Another reason why we saw the dollar fall was because the president of China called off, isn't planning to meet with Trump in late March as far as finalizing any trade deal. Now, what we're hearing now is that it might still happen in early April. Right here it says still to come in April. So we don't know. I've heard some financial advisors to President Trump mention early April. So that seems to be where they're leaning at now. So we'll see how that goes. But that's also pressure on the dollar and will help it fall until we get a trade deal finalized. It will be pressure on the dollar. So that's the review of the dollar's movement over the last week. For the outlook, I see a new negative pattern in the US dollar's price chart. Let me see here. I got to get these lines corrected here. So I see a rising wedge, basically. I will point it out to you here in just a second. Right there it is. So we'll put that label over there. We'll bring the new label in. So we got a rising wedge here, which is a negative pattern, as I stated. It looks like the US dollar will likely fall this week, in the week to come. Now it's probably just going to be more of the same. 1 week it's down, the next week it's up. There really is no economic data that's coming out that could really hit the US dollar like the jobs report, but we're likely early next week, going to continue to see the dollar fall from the lackluster jobs report, even though the ECB's move also, though, is giving support to the dollar. So we might see a sideways movement. Either way, it should fall and move down to the side. Also, the RSI and the MACD are also giving that indication. So it could come down to the $97 and resistance level, which is now actually support. And and bounce. We'll see. But for right now, I'm just looking for it to confirm this pattern. As far as future movement, we also have support at around the $96 level. So we'll see what happens next week. I thank you for your time. Take care, and God bless.